Dean Kim is now joining us. He's head of global research product at William O'Neill. He's with us to take some questions. Dean, good to have you with us here. Thanks very much for your time. The rally in broader markets, Dean, here in India has been absolutely fantastic, even as the Nifty is yet to make all-time highs. Out there in the US as well on Friday, after a long time, we got indications that broader markets there are participating. And it's not just the 6 or 7 stocks which are doing, almost 100% of the heavy lifting. The Russell was up 3.5%. What's your sense? Is the rally broadening out there, which makes it a little more sustainable?
Yeah, I mean, Friday was a very interesting day. So despite the hotter than expected non-farm payroll numbers, the U.S. markets made year-to-date highs and trading above all key moving averages. And particularly, if you look at the small caps, they're breaking above the 200-day moving average with good volume on Friday. So that was great to see. And this is the first time that small caps, as represented by the Russell 2000, closed above the 200-day moving average since early March of this year. So, we think if the trend continues and if the Russell 2000 can hold support at that 200-day moving average, trade sideways, and then move on from there, that would be a great sign. But I would say we're still quite not out of the danger zone, as we do not want to see the reversal of the small caps. And as well, as we continue to see only 31% of the New York Stock Exchange stocks trading above the 150-day moving average. So only time will tell, but so far the action looks fairly constructive. And, if the small caps can broaden out, I think that would be a great sign for the market.
Okay, the action looks fairly constructive. I get that would be your view, Dean, for the Indian markets as well, because we've had a smooth run, but for some reason we just failed to get out of that 18,600 resistance zone. Do you think this could be the week when the Nifty takes that out? And what do you think the leaders of the Indian market could be, or who could be the leaders now?
Yeah, I mean, I look at the rest of Asia, and it's great to see the AAXJ and the EEM ETFs. They're both have turned around and reclaimed their 200-day moving averages, and maybe on their way to form the right side of the base. So India, Japan, Korea, Taiwan are in confirmed uptrend. Of course, China and Hong Kong needs a bit of time. They're still in downtrend, but rest of Asian markets are in rally attempt. So I'm looking at AAXJ, for instance, very closely. Like EEM just overtook the 100-day moving average. So that's great. If it can continue to behave in that manner, we're on our way to form the right side of the base, in which case the rest of Asian markets is going to come up along with it. So I'm not particularly concerned about India, as currently, if I look at Sensex, we're at around 62,500. Next support is the rising 10-day moving average. That's less than 1% away, and right below that is the 21-day moving average. So, and that's about 1% away. So I think even if the Indian market kind of pulls back and you see a bounce off of those moving averages, I would still consider that to be healthy action. And so in terms of leadership in the Indian market, now, we're starting to see some consumer cyclical names come up, particularly automakers like Maruti Suzuki, Eicher Motor, EIH, and so on. EIH is leisure, but, then you have names like Marico, which I haven't seen in a while, but that one is setting up. A lot of the financial names are coming up, as well as healthcare names. So, the Indian market is very broad, so much broader than the U.S. So that's great to see. So I would say even if we see a bit of a pullback, as long as you see a bounce off the moving average, that would be very constructive.
All right. Hi, Dean. Morning. Any view on crude? Overnight we have some supply cuts that's come about. And from an India perspective, we are quite happy to see crude come down from around that $90, $95 odd to around $75 per barrel. Still not alarming, but it's moved up close to 3% overnight. Any view out there?
Yeah, if we look at street crude prices, right now we're sitting around $71.70 or thereabouts. We see next support level at around $69.50. Resistance at 75. So I think we need to watch the resistance level closely, especially on the back of OPEC just announcing that they're going to cut back production starting in July. So that 75 is is around the 50-day moving average. So that's about 4% higher. So that's going to be a crucial test there. So we'll see what happens. But I think we may see a little bit of a upward pressure on crude based on this news. But as you know, if oil can face resistance at around that 50-day moving average, then I would say we're still well positioned for a global rally.
We're still well positioned for a global rally. Got that. Dean, thanks a lot for joining in. Appreciate your thoughts, and thanks a lot for speaking to CNBC-TV18. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks coming up with